You're listening to The Bird Bath, presented by The Fountain Report. I'm your host, Ryan Leach. Welcome back to The Bird Bath. Each week, we scrape the surface of the news you need to know, so let's get into it. This is going to be kind of a fun, I guess if you're a dork like me, session, but what I thought would be really interesting was maybe talking about some of the stocks and the performance of different companies across the industry. So over the last few days, a ton of the publicly traded animal health companies have been reporting their Q1 results, and then it allows you to compare those versus the Q1 results from last year, 2023. I also want to dive into a little bit of what some of the other companies are doing, not the big guys, and then maybe a fun little story at the end, but stick with me here. So what the first piece is that I want to talk a bit about Zoetis. So Zoetis reported its financial results for the first quarter of 2024. Their revenue for the quarter was $2.2 billion. It was an increase of 10% compared with Q2 or Q1 of 2023. The net income was $599 million and was an increase of 9%. The U.S. segment was a major portion of that. The revenue within the United States exclusively was $1.2 billion, which was growing. It was a 16% increase over previous years. Lots of big growth for Zoetis. We continue to see them moving upwards. But the interesting thing, and keep this in mind as we talk about some of these numbers, is year to date, every company that we're hitting on is actually down in their stock prices. So we're seeing the sales and the numbers and the revenues of these companies go up, but we are seeing a downward projection or a downward performance of a lot of their stock prices. So I'm not an economist. There's different pieces at play here, but I thought it was interesting just to keep that in the back of your mind as you're hearing these. Another company that reported their numbers this last week was Vetiquinol Group. They reported the results for 2024. Their sales in euros were $134 million, or about $143 million. And in the U.S., $30 million of that was accounted for in the U.S. Their sales, though, were down 4% year over year. So we are seeing maybe some of this, I hate to call someone that brought in that amount of money a smaller player, but not the massive giants that we're seeing with Zoetis, seeing a little bit of a downtick in their numbers. Additionally, we heard from IDXX. So IDXX Laboratories reported their numbers. Revenues were $964 million, up 7%. The net income was shown at $235 million, which is an increase of 10%. The companion animal section of their business revenue was $889 million, or an increase of 7% as well. Finally, from the last big guy that reported this last week was Colgate-Palmolive Company. They reported their quarterly results, and sales for Hill's were included in that, which is their parent company, or Hill's parent company. Hill's pet nutrition sales were $1.1 billion, an increase of 4%. Their segmented operating profit was $199 million, which was an increase of 9%. Now, again, each one of these companies that we talked about, though, is down on their stock price year to date. It's surprising. It's interesting to see. And the one, though, that I really honed in on as I was trying to understand more of what's happening within the industry was not just the increase of the sales from all of these larger companies, but what the share price of a publicly traded consolidation group is doing. Now, we'd hit on them a little bit before, but Inspire Veterinary Partners, they went public in late August, early September of last year, just 8 months ago, and it has been a undeniably rocky ride. Just this week, and actually pretty late breaking when we recorded this, was that they announced that they're going to be doing a reverse stock split. They're doing a 100-for-1 reverse stock split. Now, if you are not a stock market person, I am not a huge stock market person. I'm trying to learn more every single day. But what this means is you've probably heard of a stock split. If you bought some stuff during the COVID pandemic, you maybe participated in the stock split that Tesla had, which is normally when a stock gets to a certain price point, they'll then split it into multiple additional shares as a way to make it more accessible in the market. Now, what's happening here is a reverse stock split. So every 100 shares of Inspire Veterinary Partners is going to become 1 share of the same company. It becomes effective on May 8th, which is this Wednesday at 12:01 a.m. And each one of these shares will be reclassified as a new share of common stock. The reason for this, though, is because we have seen a non-stop drop, unfortunately, in the share price of Inspire Veterinary Partners. When they first came out with their IPO, they IPO'd at about $4 a share, and they're traded on the NASDAQ market. At the time of recording this, Inspire is trading at about 3.5 cents a share, and has been bouncing around the 3 to 4 cent share price over the past few days. Now, what this would do is by taking this, it's simple math, right? We're taking 100 shares, we're converting them into 1, which will in turn make that share, if it's at 3.7 cents right now, would bring the total share price of that new company or those new shares to $3.70, which keeps them above the $1 threshold to be able to continue stay traded on the NASDAQ. As we said, their share prices are down nearly 90% since their IPO 8 months ago. And I wanted to research a little bit more and find out if this meant tides are changing or if it meant that there wasn't positive outlooks continuing. And I came across a research study by the Stern School of Business at NYU in conjunction with Emory University. And they looked at 40 years of data from 1962 up to 2001. And they found that of 1,600 reverse splits performed over that 40-year period, shares underperformed their non-split peers by 15% in the first year, 36% in the second year, and 54% in the third year. So it wasn't something that I found a lot of rosy stories out there about what this means. There were a couple. One company that successfully went through a reverse stock split was Citigroup. After the 2006 financial crisis, they had found their shares trading at a lower level. They went through this reverse stock split as a way to be able to consolidate the number of shares that were out, and they've continued to grow since then. But traditionally, when we look at this and what the 40 years of data shows is that when one of these companies goes through a reverse stock split, it is nearing the end of their time publicly traded. So fingers crossed. I'm hoping for the best here, but the difficult writing is on the wall. Now, if you're going, great, Ryan, this isn't called the stock bath. It's called the bird bath. Talk to us about some animal health stuff. I have got some news for you around the U.S. Food and Drug Administration, along with the FDA's regulatory process. They just released some new regulations and steps around intentional genomic alterations, or IGAs, in animals. The updated guidance document underscores the FDA's commitment to further modernize its approach to evaluating and supporting the development of innovative animal and veterinary products. If you can't tell that this is a quote from the FDA, now you know. Additionally, what they're going to be doing is coming out with what's called a Memorandum of Understanding, an MOU, with the USDA to clarify sort of what the roles are, who's looking over all of this. It's an interesting thing with genetic modification coming in and the genomic alterations in this situation being available. We were in a bit of a gray area, and I dug into some more research from some other folks in the ag world that talked about this as a interesting or a bit of a relief, in the sense that they've been on gray area for an extended period of time. The technology existed, but it wasn't regulated. It was something that they were reporting, but they weren't being held strong to. People worried that there was going to be a potential bifurcation of the approach to how feed animals versus other animals were classified. And this seems to be something that's allowing it to sort of pull together. There were some downsides. Not everyone was positive about the clarity around potential regulation. There was some issues and things that people had raised around the difficulty of continuing research on feed animals, the need to register, document, and regulate these animals actually does increase the cost of doing the research, as well as it does increase what, if you're not in the ag world, and I'm not, this is a tough one to say, incineration or compost of food producing research animals. So the providers and the people who could use these as food animals are going to miss out on the opportunity costs of those animals due to the increased cost of documenting this research. So kind of an interesting one. I think I'm always excited to see what's happening in the ag space. There's been a huge outbreak of the bird flu across the cattle industry. If you haven't been tracking that, let me know and we can dive deep into that maybe next week. But it's interesting. There's news and there's things that are happening, and I think our food animal production and the regulations that are there are in some ways on the forefront of what we might expect to see for other creatures under the same guidelines. So whether it's companion animals or things that we're going to start seeing for humans in the same space. So it's important to have a really healthy and robust feed animal pipeline in a large agricultural world. And it seems as if the FDA is hopefully to tackling some things to maybe make it a little more transparent about what's happening. Now, this was an unusual episode, but maybe it was one that you guys liked. Make sure you let me know. I'm always interested, and I've heard a lot of great things from some people recently who have reached out, and I'm always a big fan of hearing from you, the listener, to hear what you want to hear more about. For more on these and other stories, join us by subscribing to the Fountain Report. There's a link in the bio, and don't miss out on any episodes by subscribing and rating the show. For the Bird Bath, I'm Ryan Leach. See you next week.